What if I told you that the biggest difference between a consistently profitable trader and a trader who keeps blowing up accounts has almost nothing to do with strategy? Think about it. The same charts, the same market, the same opportunities, yet one trader stays calm, follows the plan, and grows their account over time, while the other gets trapped in fear, greed, and frustration. Why? Because the market doesn't reward intelligence. It rewards discipline, and no one explained that better than Mark Douglas. In this video, you're going to discover the 5 mental rules that separate disciplined traders from emotional gamblers. These aren't trading hacks or secret indicators. They're timeless psychological principles that can completely change the way you think, react, and make decisions in the market. By the end of this video, you'll understand how to accept uncertainty, think in probabilities, control your emotions, execute your trades with confidence, and build the mindset that professionals rely on every single day. If you're tired of making the same costly mistakes and you're ready to think like a disciplined trader instead of an emotional, 1. Stay with me because this video might completely change the way you see the market and yourself. Rule 1: accept uncertainty before you trade. Imagine walking into every trade believing you already know what's about to happen. It feels powerful, doesn't it? It feels like confidence. But let me tell you something. That's not confidence. That's attachment. And attachment is one of the fastest ways to destroy a trading account. The market has no obligation to prove you right. It doesn't know you exist. It doesn't care how much research you did, how many indicators are on your chart, or how convinced you are that the next candle will move in your favor. The moment you believe the market owes you a specific outcome, you've already surrendered your discipline. This is where Mark Douglas made one of the biggest breakthroughs in trading psychology. He taught that uncertainty is not your enemy. It's the foundation of every market. Every trade carries an uncertain outcome, no matter how perfect the setup looks. Read that again in your mind. Every trade carries an uncertain outcome. The sooner you truly accept that, the sooner you stop fighting reality. Think about what usually happens after a losing trade. You start asking yourself, how could this happen? My analysis was perfect. Then frustration turns into anger. Anger turns into revenge trading. And revenge trading turns one small loss into a disaster. But notice what caused the pain. It wasn't the loss itself. It was your expectation that the trade had to win. That's the hidden trap. That's the silent killer. Professional traders don't expect certainty. They expect probabilities. They understand that a great trade can lose and a terrible trade can win. That's simply the nature of uncertainty. Once you embrace that truth, something incredible begins to happen. Your emotional reactions start to disappear. You stop taking losses personally. You stop trying to predict every move. You stop forcing trades just because you want to feel right. Instead, you become calm. You become patient. You become dangerous in the best possible way because you're no longer trading from emotion. You're trading from acceptance. Understand this. Accepting uncertainty doesn't mean becoming careless. It means respecting the market enough to know that no one controls it. Not the biggest hedge fund, not the smartest analyst, not even the most experienced trader. Everyone operates in probabilities. Everyone faces uncertainty. The only difference is that disciplined traders make peace with it, while emotional traders fight against it. And every time you fight uncertainty, you lose twice. First you lose the trade, then you lose your emotional control. But when you accept uncertainty before you ever click the buy or sell button, you've already won a battle most traders never realize they're fighting. You're no longer trying to predict the future. You're simply executing your edge with confidence, knowing that one trade means nothing by itself. It's just another event in a long series of events. And that mindset changes everything. Because once uncertainty no longer scares you, the market loses its power to manipulate your emotions. And that's exactly where the second rule begins. Rule 2, think in probabilities, not predictions. Have you ever noticed how one winning trade can make you feel like a genius, while one losing trade can make you question everything you know? That's because most traders attach their identity to individual outcomes. They believe every trade is a personal test of their intelligence. Every win proves they're smart. Every loss proves they're failing. But this way of thinking creates an emotional roller coaster that never ends. Mark Douglas challenged this mindset with one simple but life-changing idea. Think in probabilities, not predictions. That sentence sounds simple, but very few traders truly understand what it means. A casino doesn't panic because someone wins one hand of blackjack. It doesn't celebrate because someone loses the next hand. The casino understands that its edge plays out over thousands of hands, not one. That's exactly how you must think about trading. Every trade is just one event in a much larger series. One trade means nothing. Read that again. One trade means nothing. It doesn't define your skill. It doesn't define your future. It doesn't even define whether your strategy works. Only a large sample of disciplined execution reveals the truth. Yet most traders do the opposite. They take one loss and immediately start changing indicators. They abandon their trading plan. After 2 losing trades, they jump to another strategy after 1 bad week. They're constantly chasing certainty in a world that only offers probabilities. That's why they never build consistency. They never stay with an edge long enough for it to prove itself. Understand this. A strategy with a genuine statistical advantage can still produce 5 or even 10 consecutive losing trades. That doesn't mean the strategy is broken. It means probabilities are unfolding exactly as they should. The problem isn't the market. The problem is that your mind expects every good decision to produce an immediate reward. But life doesn't work that way. And neither does trading. Think about flipping a weighted coin that lands on heads 60% of the time. You already know heads has the advantage, yet you can still experience several tails in a row. Would you suddenly believe the odds had disappeared? Of course not. You would continue flipping because you trust the probabilities. Trading requires the exact same mindset. Your job isn't to predict the next trade. Your job is to execute your edge over and over again with consistency and emotional neutrality. Let me tell you something powerful. The moment you stop needing every trade to be a winner, fear begins to disappear. Greed begins to disappear. Hesitation begins to disappear. Why? Because your confidence is no longer tied to one outcome. It's tied to your process. You become focused on flawless execution instead of immediate results. That is where real confidence is born, not from being right, but from being consistent. This is where professionals separate themselves from everyone else. They don't ask, will this trade win? They ask, does this trade meet my rules? If the answer is yes, they execute without hesitation. If the answer is no, they walk away without regret. That's the mindset of someone who thinks in probabilities. And once you master that way of thinking, something even more important becomes possible. You stop protecting your ego and you start protecting your discipline. That shift is exactly what leads us into the next rule. Rule 3, protect your mind before your money. Most traders believe their biggest goal is protecting their capital. They obsess over account balances, risk percentages, and profit targets. But let me ask you a different question. What protects the capital is not your stop loss. It's not your strategy. It's not even your experience. It's your mind. Because every bad trading decision begins in your psychology long before it shows up in your account balance. The market doesn't steal your money overnight. It first steals your emotional control. It whispers that you deserve to make back your losses immediately. It convinces you to increase your position size because this trade feels different. It tells you to ignore your rules just this one time. And before you realize what's happening, your disciplined trading plan has been replaced by emotional impulses. This is why Mark Douglas emphasized that emotional discipline is the real edge. Not prediction, not intelligence, emotional discipline. Think about the last time you made a trade you knew you shouldn't have taken. Deep down, you already knew it didn't fit your plan. You knew you were forcing it, but your emotions were louder than your rules. Fear told you that you'd missed the opportunity forever. Greed promised that this trade would solve everything. Ego whispered that you couldn't let the market beat you again. And you listened. We've all been there. But understand this. The problem wasn't the chart. The problem wasn't the setup. The problem was that your emotions were making decisions that your trading plan should have made. That's the difference between amateur traders and professionals. Professionals don't eliminate emotions because that's impossible. They're human too. They feel excitement. They feel disappointment. They feel frustration. The difference is they don't allow those emotions to become the person pulling the trigger. They recognize the emotion, but they don't obey it. That's a skill, and like every skill, it must be practiced every single day. Let me tell you something powerful. Every time you choose discipline over impulse, you're strengthening a part of yourself that becomes harder to break tomorrow. Every time you refuse to chase a trade, you become stronger. Every time you accept a planned loss without revenge trading, you become stronger. Every time you follow your rules, even when your emotions scream otherwise, you become stronger. That's how discipline is built. Not through motivation, through repetition, through thousands of small decisions that nobody else sees. Remember this, your account balance is simply a reflection of your decision-making process. If your emotions control your decisions, eventually they will control your money. But if your discipline controls your decisions, your money has a chance to grow consistently over time. Protect your mind first, and your capital has a protector. Ignore your mind, and no risk management rule will save you forever. Because the most dangerous trader isn't the one with a bad strategy, it's the one with an undisciplined mind. Once your emotions stop controlling your actions, something remarkable happens. You stop needing to force outcomes. You stop fighting every loss. You stop chasing every opportunity. Instead, you begin trusting yourself. And when you truly trust yourself, executing your trading plan becomes effortless. That's exactly what the next rule is all about. Rule 4, execute without hesitation. Exit without regret. Picture this. You spend hours analyzing the market. You find a setup that matches every rule in your trading plan. Everything lines up perfectly, but just before you click the buy or sell button, doubt suddenly appears. What if this one loses? What if I should wait for one more confirmation? What if the market turns against me? So you hesitate. You watch the trade move exactly the way you expected, without you. Minutes later, frustration takes over. You jump into the move late, chasing price instead of following your plan. Sound familiar? This cycle repeats every day for countless traders. Not because they lack knowledge, but because they don't trust themselves. Mark Douglas believed that hesitation is rarely caused by the market. It's caused by conflict inside your own mind. When you truly accept uncertainty and think in probabilities, there is no reason to hesitate on a valid setup. You already know that any individual trade can win or lose. Your job isn't to guarantee the outcome. Your job is simply to execute your edge. That's it. Nothing more, nothing less. Understand this. Every time you hesitate on a valid setup, you're silently telling yourself that you don't trust your own process. And every time you ignore your own rules, that trust becomes weaker. But the opposite is also true. Every time you execute exactly as planned, regardless of the outcome, your confidence grows, not because the trade wins, but because you kept your promise to yourself. That's real confidence. It's built through consistency, not prediction. Now let's talk about something just as important, knowing when to leave. Many traders know how to enter a trade, but very few know how to exit emotionally. A profitable trade starts pulling back slightly, and fear whispers, "Take the money before it's gone." A losing trade reaches the stop-loss level, and hope whispers, "Just give it a little more room." In both cases, emotion replaces discipline. Fear cuts winners too early. Hope lets losers grow too large. Both are expensive habits. This is why your exit strategy must be decided before the trade begins. Before you enter, you should already know exactly where you'll admit you're wrong and exactly where you'll take profits according to your plan. Once the trade is live, your only responsibility is execution, not negotiation. The market is not a courtroom where you argue your case. It simply moves. Let it move. Let me tell you something that can completely change the way you trade. The goal is not to exit every trade perfectly. The goal is to exit every trade according to your rules. There's a huge difference. Chasing the perfect exit keeps you trapped in regret. Following your plan sets you free. After the trade is over, don't waste your energy wondering how much more you could have made or how you could have avoided every loss. Regret has never improved a trading account. Learning does. Review the trade, learn from it, then let it go. The market will always offer another opportunity, but only if your mind is clear enough to recognize it. Execute without hesitation. Exit without regret. Repeat that process enough times, and you'll stop behaving like someone searching for the perfect trade. You'll start behaving like someone building a professional career. And once that identity takes root, the final rule becomes the natural conclusion to everything you've learned so far. Rule 5. Build identity through consistency, not results. Close your eyes for a moment and imagine two traders. The first trader wins 3 big trades in a row. He feels unstoppable. He believes he's finally figured out the market. His confidence explodes, and so does his position size. Then one unexpected loss wipes out weeks of progress because his confidence was built on outcomes instead of discipline. Now imagine the second trader. He follows his trading plan every single day. Some trades win, some trades lose. But his behavior never changes. He doesn't become overconfident after a winning streak, and he doesn't fall apart after a losing streak. Month after month, year after year, his consistency quietly builds something far more valuable than profits. It builds identity. This is the final lesson that ties everything together. Mark Douglas understood that lasting success doesn't come from trying to feel like a successful trader. It comes from repeatedly acting like one. Your identity is nothing more than the sum of your repeated actions. If you consistently chase trades, you're becoming a chaser. If you consistently break your rules, you're becoming an undisciplined trader. But if you consistently execute your plan with patience and emotional control, even on difficult days, you're becoming the kind of trader who can survive and thrive over the long term. Let me tell you something important. The market is always watching your habits, not your intentions. It doesn't reward the trader who says, tomorrow I'll be disciplined. It rewards the trader who chooses discipline today, even when nobody is watching, even when it's uncomfortable, even when the last trade was a painful loss. This is where real transformation happens. Every morning before the market opens, ask yourself a different question. Don't ask, how much money can I make today? Ask, who am I going to be today? Are you going to be the trader who panics after one red candle? Are you going to be the trader who moves a stop loss because hope feels stronger than logic? Or are you going to be the trader who follows the process regardless of the outcome? Because every decision is casting a vote for the person you're becoming. One decision won't define you, but thousands of decisions will. That's why consistency is more powerful than motivation. Motivation comes and goes. Emotions rise and fall. Markets trend and reverse. But disciplined habits create an identity that remains stable through all of it. Stop measuring your success only by dollars. Start measuring it by how faithfully you followed your rules. Did you wait for your setup? Did you manage risk correctly? Did you accept the outcome without emotional drama? If the answer is yes, then you had a successful trading day, even if the trade lost money. That's the mindset professionals understand, and emotional traders ignore. Ironically, when you stop chasing profits and start chasing disciplined behavior, profits often become the natural result. Not because the market suddenly becomes easier, but because you finally become the person capable of handling it. Remember the journey you've taken through these 5 rules. You accepted uncertainty. You learned to think in probabilities. You protected your mind before your money. You executed without hesitation and exited without regret. And now you've discovered the most important truth of all. Great traders are not born with extraordinary discipline. They build it, one decision at a time, until discipline is no longer something they do. It becomes who they are.